Has this week been really great from a swing trading standpoint? I would say yes. Welcome to the Platinum Channel in our weekly review where we go into the different charts and we get into the lists of the Platinum Swing Trading Service that Best of US provides for a fee, of course, right? So anyways, today what I want to get into is really start out with some of the economic numbers that have come out and hit on that, along with getting into some different segments of the market, a review of the three big indexes, along with a fourth surprise and a couple other things. So welcome to the Platinum Channel weekly review. Let's get to it. Well, for this segment, I'm going to put on a sweater because, like retail sales, it's getting a little cold outside. This is my buddy Ozzy, my daughter's golden retriever. And so we want to get into, in this segment of the video, the retail sales side of things because of the indications that Walmart, Home Depot, and Target have come out with. And then Kroger came out with earnings this week, and they were like, bomb diggity, because most people are just buying what they need. Mark will talk about that and what some of these CEOs said in their earnings calls. Let's check it out.
Then on retail sales, you start looking, retail sales report came out. Consumer spending, of course, is over 60% of our economy and GDP. Retail sales decreased by 0.1% month over month in October, putting an end to a 6-month streak of increases and compared with the market consensus of a 0.3% decline. So again, we're seeing retail sales go down where they've been going up. Now, one point of data is not a trend, but when you start putting the dots together with what else is going on in the economy, it's interesting to make your own assumption. To kind of back up retail sales, we had a lot of reports this week, and the three that I looked at, Home Depot, Walmart, Target, and a lot of these came out, and they had not so bad as far as the earnings, but it was their guidance that kind of made the difference in the markets. So Home Depot indicated caution about the coming months as it's narrowed its full year outlook. It said it now anticipates sales will fall by 3 to 4% from the prior year. Home Depot expects earnings per share to slide by 9 to 11% compared to the prior guidance of 7 to 13%. Walmart declined 6% after the company expressed concerns about the outlook for consumer spending. Walmart said that the U.S. consumer continued to exert caution with their spending in the face of inflation and rising interest rates. With higher interest rates kicking in and household savings dwindling, sales have been somewhat uneven over the past 2 months, executives noted. Walmart's bigger focus on groceries has provided them a bulwark against the broad slowdown in discretionary spending, with more than half of the company's merchandise comprised of food and other daily essentials. At Walmart, groceries are up by a mid-single-digit percentage compared to last year, but still elevated by the high teens percentage compared to 2 years ago, Walmart CEO said. So they're not really selling the big ticket items. What they're selling is food. And you can see that with what Kroger came out with, that Walmart is doing much better. When you look at Target, they don't focus so much on food. Target on Wednesday topped Wall Street's quarterly sales expectations and blew past earnings estimates as purchases in high-frequency categories like food and beauty helped prop up weaker consumer spending. Shoppers aren't buying much more than the necessities, the CEO said. In the fiscal third quarter, Target's total revenue fell from $26.52 billion in the year-ago period. Comparable sales dropped nearly 5% year over year as customers bought fewer discretionary items. Digital sales declined by 6% compared to a year ago. So we're looking at, and I think Trent, you wrote something about this when the retail sector came out with these, and so they're not looking at a really good Christmas coming up. And remember, last week we talked about Maersk, which is the second largest container ship company in the world, laying off 10,000 people before Christmas with less demand. So again, we're just connecting dots.
In this segment from Friday's Swing Trading Platinum Channel discussion that we have every Friday at 11:30 a.m. Central Time. We got into three different areas of the markets and what determines and instigates a lot of market movement. And first of all, we looked at markets versus companies, fundamentals versus technicals, and the known and unknown when it comes to news that we hear about or economic information that we get on a monthly, quarterly basis. So let's get into it as Mark explains and gets into it with Paul about how these different things can affect the market and its direction.
Oh, my limits triggered on Monday, so
Well,
I
that's
didn't pull them
fine.
up high enough. Yeah, it's fine. But I scratched my head because, basically all the information that you provided indicates the market should be going down, except for the beginning of your, the beginning of how you spoke. You mentioned a few things that drove it up this week and caused all of your all the hoopla. However, I mean, the stuff that you just indicated, all that other stuff is indicating, it's like you said, the storm is coming and the market's going to fall. I mean, that's what Trent alluded to. So I scratch my head and watch. I think I like to look at the sectors in which some sectors are going to do better than others.
Yep.
So, you're not going to go to the used cars right now, or you'd be careful about retail. I was just quickly looking up retail, by the way. 40% of Walmart is in other parts of the world. So we got to, I try to focus on the hotter sectors, the ones that are doing better than the entire picture. But
No,
you're
that's
teaching,
good.
yeah. So, but also learning a lot from yourself and the group about how to read the technicals. Like, for instance, today I came in and I had the limits up and I'm like, these technicals aren't looking good. I think I'm going to pull out for the weekend. You kind of sleep easier when you're into these swing trades. You don't want to bring them into the weekend. You don't know what's going to happen during the weekend. But again, like some of these, I mean, you see the event that Microsoft where he had Jensen Huang in NVIDIA. I couldn't believe the stuff they're doing. So I treat that a little bit differently. There's the market conditions and there's the company and the sectors and who's doing well. And then there's the market and there's the market psychology. So it's a big mix of things.
Yeah, there's fundamentals and then there's technicals. And then there's market conditions, known and unknown, like
And
this
psychology.
weekend, you could have you buy a stock and it's looking good. And then right after market close, some securities guy comes out and downgrades your stock. And the next, Monday morning, it's down 20% out of nowhere. That's an unknown market condition, which
Yes.
which kind of keeps me out of the market on weekends if I have. I prefer to be out over the weekends, like you just said.
As usual, Mark gets into the different 3 or 4 different indexes and reviews them. In particular, the S&P 500, the Dow Jones Industrial Average, and the NASDAQ 100. But this time, Mark pulls out the Russell 2000, which in the last week has made a big move higher. And honestly, it's been on a downhill slide since November of 2022. So this is a really interesting breakdown of what's happening within these indexes. The big word that you should take away from this next segment is gaps.
This is the SPY S&P 500. Again, this was October. And then we hit November, and here we go. And then we had this week, and CPI came out. We gapped up. You're looking at a lot of gaps in this chart. Gap, big gap here. And then we came up, and here's my favorite little intermediate resistance line. And we hit it, and that's where we're headed. Now, we'll have to see if we can get over this. There's some cells above it. But for 4 days, we've just been going sideways on this. You're starting to see just a little bit of a flattening out, maybe curving of the histogram on the MACD. These are still high, and they'll be flat because they're at the top. But we'll see what happens. But I see this on a lot of charts. Apple looks the same way. There's just a lot of charts that look this way. But this resistance line is There's normally a place, if I were a swinging SPY, they came up here and hit that, I would be out at that point as a swing trader. Let's go look at the Dow real quick. See what we got here. Same kind of thing. Here's October. Oops. Here's December. Here's our resistance. Boom. Starting to see just a little bit of a bending over the MACD. Seeing the histogram kind of, the lines are getting closer. Seeing a little bit in the Dow, the RSI tinkling down just a little bit because we're down. But again, a couple of days of flat right along the resistance line. And then let's go over to the Qs. NASDAQ. Same thing. And again, got gaps on the Dow, not so much, on the NASDAQ, we do have gaps here, gap up here. Gaps tend to be filled, especially on indices. But again, about 4 days of kind of sideways, deciding if it wants to break through this resistance level or not. So, I look at this, I saw that gap and I'm like, wow. And then we went sideways. Now we're coming up on a weekend. So again, this is another reason why I like to be out on a weekend. I don't know which way this is going to go, but I'd rather have my profits, like Paul said, sleep well, have a couple beers and a steak and worry about it Monday morning. I'll look at the charts when the markets close tomorrow. Today they'll close. I'll look at them tomorrow, see what the setups are, and throw them back on the horizons list and everything that we watch. And we'll go one we normally don't look at, but got some attention this week, is the Russell, the small caps. And you can see the Russell was like a gap here. We had a gap here that got filled. Another huge gap. And you can see the Russell has gone up and actually passed through its resistance. Kind of went up to actually the 200. And now we're going sideways on the Russell too, but we're starting to see stochastics rolling over a little bit. We'll see what happens with the Russell, but that was kind of interesting too. Let's see, because if the Russell goes, you're not seeing the Microsofts and the Magnificent Seven in the Russells. So we'll have to watch this a little bit and see. But again, it's going flat too.
And that's under that's under the 200-day, where the other three screens you're over the 200.
Exactly. Yeah. They've been under since about September. Back in here.
Every Friday on the Platinum Channel Swing Trading Call that we host every Friday at 11:30 a.m. There you go. We talk about the different lists that Mark puts together and releases on Sunday night, early Monday morning of each week. First of all, you got the watch list, and these are stocks that Mark likes, and they have met all of his different indicators that he looks for when he's looking at these stocks. Now, take into account, Mark searches through about 1,000 different stocks looking for opportunities. The watch list, from a risk standpoint, is the least risky. The second list is the horizons list. These are stocks that are on the horizon that will, some of the indicators that Mark looks for aren't met. So they go on the horizons list. But there are some that are met, and that creates opportunity and a little bit more risk in the overall trade when it comes to swing trading these stocks. And then you got the below 200-day moving average list. Now, these are stocks that are below the 200-day moving average, along with a bunch of other indicators that they don't meet his criteria to be on the horizons list or the watch list. But a lot of times when we see markets like we have in the last week, go down since July, and now are making some rallies back up, the more riskier positions on the 200-day moving average have produced some amazing returns in a week's time. So one other thing to remember about how Mark goes about investing in these stocks, he doesn't carry anything into the weekend. And the reason is we don't know about what could happen. As we talked about earlier in the segment about the known and unknown, weekends create the unknown. And they could be, right now we've got 2 wars going on. We've got some tension with China and a couple other things. And over the weekend, big things could happen. and market could open against you in a big way if you're carrying positions. So one of Mark's rules about swing trading is he doesn't like to carry things into the weekend unless it's, well, Berkshire Hathaway, because he loves that company. So let's let him get into it and take away some really good information and how he traded those three lists.
With the market going up in November, it's a pretty good week. I finally got out of Berkshire, and I'll show you that, why I got out and how I should have played it better. We were in SLM Corporation, which, it's a small numbered stock, and actually got out of that because it hit a sell limit before, above the cost basis, only made 3 cents a share. Okay. But we didn't lose. So, and you can see when I talk about the morning watch list in the morning, I'll go over the stocks that are in the paper trade portfolio and where the resistance and support levels are, and kind of give you an idea of what my thoughts are on when I would get out. And I did say I would probably get out above cost basis because I wanted to make sure I had a gain on that. And then Google, we got out of Google also. It hit sell limits at resistance, and that was yesterday also. So we'll take a look at a few of these. So basically, we were up 3 cents on SLM. Google, we were up $4.50 a share, and Berkshire was up 14.27. So that was $18.80 a share total on this week's watch list. And I want to go back and we'll take a look at Berkshire and what I did wrong or what I could have done better. Okay, so here's my cost basis when I put it on the list. You can see it came and we had a 1 candle close above the 9. So I actually saw before market close this was going to do that, and I caught a little bit below the close level. Next day, nice day. Next day up, nice day. Next day we came up, hit basically the 50. Then it was the weekend, okay, and they do the earnings on Saturday, and I normally get out before earnings, but I didn't because it's Berkshire. Kind of like Paul, I know this company, and I know better than the chart. Well, earnings came out, and the chart came down. I was still above my cost basis. Came down, hit the 20th support, stayed in, hit the 20th support, stayed in, started rising up, rising up, rising up. When it came up here and it hit basically right where earnings went up to, it hit the upper Bollinger Band, and that's where it hit my sell limit. Okay, so I only made $14.27 a share, and it's gone up a little bit more. Another, where are we at now? 358. So anyway, when it's on this side of the Bollinger Band, the lower side on the uppers going up, it can go up for a while. It's when it starts trading above the Bollinger Band that you're probably going to see a pullback underneath. So what I should have done, and I've done this before, is sold half my position and kept the other half, and then come up here and I would have had a little more, because I would have sold today because it's Friday probably. I'm seeing a little bit in crossover. So it would have made me a little more on a half position. But like Paul says, you got to be happy with the profit. But there's always ways to learn, Let's look at Google here. So Google, we got in back in this area right here. Here's our cost basis. Went up, got above the 50, came back up. This was yesterday. It hit basically the intermediate resistance. This line was actually lower yesterday. These things move. And so I hit a resistance level here, and that's where it got out right here. And you can see today it's below where I got out. So that's why I like using these lines. This resistance line was lower yesterday. And they move as, the days, and they calculate. And then you look down here, we're seeing a stochastic, we're seeing an RSI go down. So that was a pretty good trade for $4.50. And then this one was kind of a
Quick question.
Yeah.
On Monday, when you bought it, as soon as you buy it, or as soon as when I buy it, I usually put in the stop loss and the gain limit.
Yep.
Did you put one in for Google on that Monday?
I put one in on the low side.
So we're
And I
about,
can't remember if I put it in at the 9 or the 20. It was one of those two.
and then the high side at the 50 maybe.
I didn't put one in on the high side on this
Oh.
one. I let it run. I thought, and sometimes I'll do that. I won't put it in on the high, especially when the lines are pretty close, you know,
Yeah.
and I'll just see what happens. This one popped over, and once it popped over, I'm like, okay, now that's support. So that's where you would move your sell limit up to this point, or you could keep it at, a little bit above wherever your cost basis is, however much you want to make. But that's kind of how I do it. But you could put in both if you want, that way you know exactly what your risk on the bottom side and what your gain on the top side is going to be.
Yeah, I've run into a
Did I
habit
answer,
of
did I
putting,
answer your question? Okay.
you did. I'm asking myself if I should start. Oh, another thing, no, another question just came up. Many trades, I miss it by just a fraction of a point. Like, I try to get in and I consistently miss it. And I think that might be because I'm a bit conservative and I don't want to pay more than I could have paid. But I'm just speaking
Yeah.
out loud to myself because in taking notes, I write that down. I didn't get the trade, not executed because this occurred. And I, go on the chart to see where it might have triggered. Oh, how I missed it. But
I
yeah,
did
thank you for
that
the
on
info. Yeah.
I did that on Monday. I put an order in for the PGAB or whatever that was, and put it in
Yeah.
at, what was it? Something like, it came down to whatever the first number was, 0.83, and I had it in at 0.8, and I totally missed it, and I didn't go chasing it. But now looking back, I'm like, should I have just put it in at, at the high end of the pre-market and picked it
What,
up?
what price did you put it in?
I put it in at what was it was it 8?
Oh, that's pretty good because I have 7.5 on I tracked here, which is
Oh,
crazy
hold
low,
on, let me take a
crazy
look.
low. But it went haywire. It went really up fast on Monday morning.
Mark and I
So
were going back and forth on it. I forget what I put it in, but it was like 3 cents below where it came down to, and I was like, I totally missed it because I wasn't looking at it in the morning.
do you have Monday up, Mark? Is that Monday?
Yeah. This is today, Thursday,
Yeah.
Wednesday, Tuesday, Monday.
So it traded between 7.12. Is that right?
This is 7.77 here. And this is 8.47.
So I had 7.5.
Yeah. See, I
Monday?
set a limit to get out at the Bollinger Band,
So
and then it just kept rolling. But I see that, again, not always, but a lot of times it gets above the Bollinger and it'll reset because it's overbought on top of the Bollinger.
Yeah.
And it did, because look at the Bollinger here on the low side. It just keeps, chugging along on the bottom side. Never did, except for here, really get underneath it.
So
So
you set your sell limit at the Bollinger Band
I
on
did
that one?
right here. Yeah.
Mm.
But
Yeah.
that's okay. I got what I needed.
Yeah.
This would have been nice, and then had I not done that and wrote it up, I would have set it. I'm not sure where the cells were on that day, but I would have set it here where the cells are. And then of course, right here you've got intermediate resistance and the 200. That's just a lot to get by. Let's go back and just look at Google here for a second.
Yeah, I had put
Yeah.
it in at 7.80.
Yeah.
And at 9:45 on Monday, Mark says, looks like you missed it by 1 penny.
Yeah. And you're going to do that, and it's going to happen. And you just, I was just looking at Google. Go ahead.
Go ahead.
I was just looking at Google, and here's our intermediate resistance line, and just go back in history sometimes, and you look, and you can just see where it boom, 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 boom. Then it gets above it a little bit. It gets up to where the cells are, boom, 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 then down. So here we are again. Now that line is almost a gold standard for me, as far as getting out. And sometimes it goes fast, but for the most part, this has saved me a lot of money. One of the things,
what's that line?
that's the intermediate resistance that my program has. It's that Active Trader Pro has.
I have it. I'm trying to see it where it is on your
It's this one's
tab
at
up
one.
there.
Oh, you come up here in the technical analysis, support and resistance.
Yeah, I have that. Okay. Okay.
And then you set it, and you can actually get into it, oops, and modify it if you want. I keep mine at intermediate, but let's move it to short. See, short didn't do anything. Let's move it to long. Long didn't do anything this time either. So it'll tell you, here's your resistance and here's your support. It's a nice tool.
Excellent.
I like it. And here's your support right here, the blue line. And you can see, you come down, you play around that line too. Here, it really went under because of earnings. Boom. So I would get out before earnings. And then it's come back to about where earnings was. So that was the watch list. Let's go to let's take a look at just these real quick horizons lists. These were really good this week because the market went up and helped us. And again, the horizons, I just on these, I just go between support and resistance basically and let the chart run itself. But we had 6 in the horizons list. ICSGP, XLF, Snow, Lyndale, Palo Alto. They all went out at resistance, out at upper Bollinger, out at intermediate resistance, upper Bollinger, out at 97, which was resistance, upper Bollinger out. So it was a nice week. Had nothing to do, the amount had nothing to do with me. I found these that looked like they were good setups based on the horizon criteria. And then we had a nice, CPI helped us out. Let's just go take a look at a few of these. So CSPG came on the list at about 79.65. It dropped, I can't remember if it was probably here, but it popped up and came up, hit the Bollinger Band, and that's where I got out in the upper Bollinger Band because it was so close to the resistance level. I'm like, I don't know if it's going to play it or get past it. Again, it did get past it, then it went sideways. So now it's playing, sideways above the resistance, which becomes support. You've got some cells up here. You can see it comes up, touches the cells a couple of times and gets out. But with this one, I wanted to take, I think we got $2.13 a share out of that one. And again, it's going sideways now. So when it goes sideways, like over here, you never know what's going to happen. So take your profits and run is what I do. Follow your trading guidelines. Let's look at.
Did the Scholastic help you make that decision?
What's that?
Or did this Scholastic, the SS, help you make that
Yeah,
decision?
I mean, these always do. The issue with these, the Scholastics, when they get up here at the top, is that's the top. So they're both, they could go for a long time, and just kind of crisscross here. So unless I saw, the percent K line really go down below the percent L, okay, or the percent D, this could just go on forever. So that really didn't have a play for me because that was right here. And, we had an RSI that went up. We had this, we had a MACD going up. This is what made it for me. The Bollinger, I was either going to do the Bollinger or the long or the intermediate resistance line. And I chose the Bollinger. So that's where I got out, and I'm happy with that because you can see I'm up, it's up a little above, but again, this intermediate resistant line gives me fits. And so I just get out. Palo Alto Networks. This is what Paul was talking about. See, Palo Alto got in, rode it up, and then when it hit the Bollinger Band again, that's when I got out. I've been really using the Bollinger Bands, especially in these markets that are kind of crazy. If I get above it, get above my cost basis, I'll just use it. And I don't care. I'm not trying to hit the tops or the bottoms. Then, earnings came out too. So that was another, reason why I wanted to get out, because I want to get out before the earnings. And then you see what happened at earnings, then we dropped down. Now we're popping back up. But again, at the time I got out, everything was looking good on the oscillators, but this is what I didn't want to do is this earnings. So earnings were 56 cents.
So I've been wanting that stock for a long time as part, a little piece of my core position.
Yep.
And what I did was, it did bad on earnings, so that next day it cratered, and I bought it
right.
at 237.
Yep. Right here, support 237.30.
Yeah,
And you can
and I'm
see,
just
look at this. I mean, go back when you were doing that, Paul, go back and look,
that's
you
what I
know?
did.
Yep, that's what you got
Yeah,
to do.
yeah,
Yep.
and I'm like,
That
wow.
helps you out. Eight out of 10 times that'll do you well. And then you always have the lower Bollinger, if you really want to, try to get a little more. But you
Yep,
like this company, so that's a case where you use it to get in for maybe a more of a long-term hold, huh?
exactly. I bought a, not a swing dollar amount, a bigger amount, because I like the stock, so I wanted the core position and keep it for a little bit. So
Yep.
excellent.
Let's go to snow. So snow, look at this. So the reason that I got in here at snow is I was just looking at this line here, and I'm like, okay, um, should I get in and hit it? We're above the 200, and we kept closing above the 200 here and here. Once we closed above it, for me, that was confirmation. I went down, the MACD's up. I had a crossover a little bit on the stochastic. We were above the RSI. Got in, went up, hit the Bollinger Band, boom, out. So that's where that happened.
Well, that's
That was
Monday,
a quick,
right?
yeah. One,
That's Monday.
2, 3,
Yeah.
4 here, yeah. So that was a quick one. But again, I use the Bollinger Band. You can see, and here's where some cells were up on here. That's just today. I don't recall where the cells were, on Tuesday. But this line will
Mm.
move. All these lines will move based on, the 9-day kicks off on the 10th day it kicks off the first one and adds that in and divides it up by 9. So that's how that works. Let's go
So
look at the
again,
end of it. Go ahead.
on that trade again, you just put a loss limit. You didn't put the gain.
On the snow trade. Let me go back to it.
Yeah, on the snow trade, did you sort of like the Google? You just put a loss in there and you watched it.
Normally what I'll do is I'll just trail up with the loss. Once I don't remember what I did on this. I think I just left the loss. I think I went in and hit it when it hit the upper Bollinger Band. I can't remember if I no, I did put a limit on that. I put a limit on the top side.
Okay.
Now this here, this was not the resistance level at the time. It was above this.
Right.
So resistance came down on today's chart, from 4 days ago. This we still have Mr. Car Wash, which is interesting. That came out of nowhere, but we've had that on here since last week. LKQ, I think came on Tuesday or Wednesday along with AHR. These aren't doing as well. Okay, I'd have to see, if they've hit this, then you would have been out, at the support level. Basically, if it had gone below that, the RSIs were down. Mr. Car Wash is still doing pretty good, for a small little stock. Today, Cat went up and hit resistance. Okay, so we'll take a look at Cat, but it was a pretty good week just on the, and again, when you have a market like we had that went up on CPI, it's a nice bonus for a swing trader because it gave us a lot of this that we probably wouldn't have had, in a regular market.
So on Mr.
Let's
Car
go.
Wash, I mean, it hit.
Yeah.
There was we could have got out at the Bollinger Band, or if you look at the trade, it
Yep.
surpassed the Bollinger Band.
Yep.
So why are we still in it?
Well, because on this one, it's such a
Yeah.
small amount of money, and let me get you. I
Thank
mean,
you.
we're talking on 100 shares, which is what I based it on.
I couldn't get
I'm
in
not
this
going
one. I
to lose
want
that
yet.
much. And then it came up. I'm like, I was shooting for up here, and I look up here and I'm like, this is where the upper resistance level is. So I wanted to ride it as much as possible, and it didn't go past. So here's what I'm really targeting right here, where these cells are at 768. We'll see. I'm above here. I would probably set this will probably pop down, hit the 9 at some point if it goes down. Let's look down here. Still good. Seeing a little bit of a roll here, not much, but that's because of today. So I mean, I'm going to keep this probably on over the weekend and then set a limit somewhere over this guy right here. Or, if you want to be chancy, you're up. It's not that much money. So, do you want to go up and try to hit 768, or you want to come down and get out right before 675 when you're in
So when you weigh in the
633?
the price, you say it's not that much money, but it could be, I
Well,
have my
and
corp,
see,
yeah.
well, I mean, for me, I'm assuming on the paper trade, we're only doing 100 shares just for consistency.
Right. So if you say that's just indicating that you're risking less, so you'll roll the dice more. Is that what you kind of mean?
Potentially, yeah.
Okay.
Yep.
Okay. Just trying to follow your thought process, because I think I would have got out on that one. I mean,
No,
based on,
that's
yeah,
perfectly fine. Yeah,
yeah.
for me, and then I look at the other positions there, and I'm like, okay, I'm already up so much. You can start playing with house money there too, and take a little more risk if you want to.
Just understanding your psychology, you
Like
look
on
at,
the, yeah,
yeah.
well, like on Berkshire. The other reason I got out is because I got out and it paid for my trip to South Beach next month. So I didn't want to. I wanted to remain in the positive on my South Beach trip, um, and I didn't want it to go down, so I had to pay some out of my own pocket. So there's some selfishness in there too, Paul.
Yeah, so
Agreed.
today I had like 3 open positions, and one of them was a little in the red and 2 of them were in the green. I'm like, or 3 of them were in the green. And I was like, I'm just going to close these because I'm not going to worry about them. And
Yep.
even though, some of them, one of them still look, or 2 of them still look good, I could have held on to them, but just to put your mind at ease, I don't have to worry about them, kind of thing, or pay
Yeah,
for this. I made
I
my
would rather have a
2%.
gain. I'd rather have a gain than a loss any day. And even that one was 3 cents. And I'm like, a gain is a gain. It's $3. I can buy a beer at the local bar this weekend and it's paid for. This was Caterpillar. This one triggered today. And we got in back here right after it had basically a close above the 9. We got that, came up. Actually, this is where, we gapped up and we closed above the 200. I'm like, okay, well, now I got new support there. Came up, missed the seller there, missed it here. Today it hit right on the where the sell limits were and got out at that point. You can see it's sitting right there. There's a Bollinger Band right above it. And so that one we got out about 13.32 a share from here to there. See, those are the ones that get a little
Nice one.
pricey on 100 shares, Paul. That I'm like, okay, I'm dealing with $13 a share on 100 shares as opposed to 32 cents on 100 shares.
I usually put the market in with the price, like, okay, swing trading, I'll swing trade 500 or 1,000, doesn't make any difference. That's the amount I go in with. Not
Right.
like 100 shares is, like you're saying.
I just
I
do
go
that
with the dollar value.
I do that for consistency because it's a learning, the paper trade portfolios for learning purposes. So that's just something I keep standard, but it's up to you. Other people don't have the money, right out of the gate, younger people to do, 100 shares of Caterpillar at, 253 a share, but
That
you
was a
can
good
do,
one.
maybe you can do, yeah, this
Yeah.
one worked out well for Caterpillar. And, again, thank you but look down here, you're seeing what's happening down here, stochastic. We're seeing we're hitting. That's why the sell limits are here. And look, this is another thing. See where the sells are? They're right under the Bollinger Band. So everyone else is seeing the same thing we're seeing. And so they're putting majority of the cells right under there. So it'll come up and hit before the Bollinger Band and they get out. Okay. And you see, we haven't hit the Bollinger Band yet. So again, that was a pretty good one on that one.
Caterpillar's in the Dow, correct?
Yeah, they are.
I always look at John Deere too when I look at Cat, because they ride together. So
Deere is very high tech because I rode in a brand new Deere tractor. I showed Trent, and that thing ran itself. Yeah, here's Deere. So Deere just got above the 50. Got about a good oscillator action here, and it's above its resistance level too. So that will turn into support, and we'll see what happens. It's following its Bollinger Band up. Here's where the cells are. It's under the 200. Huh. Let's look at like Paul was saying. I go and I look at the I look ahead on the weekends to the sectors uh, to see where the money's flowing. And so this is today, okay? In the energy sector, you can see, has been down since the middle of October, down, down, down. You can see the channel it's in. And then today, the price action is now above, it's above the 9, and now it's above the 200, okay? It's coming right up on the 20. So I will go in. I'm looking at this. I'm saying, okay, so here's the energy sector. We're starting to see a little life in the energy sector. Here's the MACD doing a little crossover. We got the stochastic crossing over. Let's go take a look at, either you want to hang around in here. You can see back here that the 200 was a nice level of resistance or support. I mean, at this point, if we can get past it, it's been resistance. If we can get past it, we might be able to see a pop. So I go back in. You can see back here, it looks almost the same, except we were a little further above on the 9. But once we got past the 200, it kind of tested it a little bit, tested it. But once it got past it, wrote it up. Again, got the 9. But I'm seeing the same kind of thing here, and we'll just have to watch it. So I'll go back into the index and find some stocks just to see what's going on. So this is one I like to watch, Murphy Oil. And you see with Murphy Oil, this, I think I was in on some of this over here. Murphy Oil came up, got above the 200. Here's your one candle above, came down, dropped back down below the 200, came up, got above it again, and just rode, basically the 9 all the way up to this point here. That would have been a nice swing. Came back down, kind of sideways to down, came back up during the October energy boom. And then, we hit November. But here's Murphy Oil, and you're looking at Murphy Oil is above the 200, and it's going to close above the 9. So, this is how I start looking at things for either the below the 200 list or the horizon list. I'm looking for this downturn. I'm down here looking to see, okay, well, we don't quite have confirmation on the MACD. Of course, the day's not over. And I'm seeing it's coming right up on the upper channel that it's been in. We'll see if we can get any suction out of it, or any friction out or traction out of this and move this up higher. We'll see. This isn't something I'd get in yet, but this is something I'd be interested in. So that's how I kind of go and look, kind of like you were saying, Paul, where's this money flowing? It's flowing out of something and into something. Is it going back into energy? It may be, the XLE.
Would Exxon fall into that same bucket?
Yeah,
XOM?
you could look at Exxon.
Yeah.
I think I actually looked at Exxon, and I used Murphy instead. I don't think Exxon quite. Yeah, Exxon's right here, but here's our 9. We'd have, or the intermediate resistance. We'd have to get above that. They just had, yeah, okay. So see, it looks almost like the same chart as Murphy, except Murphy's above the 200. Yeah, the other one I looked at is let's look at SMH, the semiconductor. Let's see what's happened in semiconductors. SMH. So this is your semiconductor ETF, and look what happened. Here we are again. This looks like our major indices. Okay, 4 days just hitting on this 9. Now, does that mean it can't go up? No, that doesn't mean that, but it's having some trouble. It's got to get past that. Seeing a little bit of a roll here, tad bit. Still have the 9 and the 20 screaming up, but we'll see what happens. So then you go and say, well, let's go and look inside the SMH. Let's look at NVIDIA. That's the big one. I bet it looks the same. Yep, almost the same, except the 9 is a lot closer. Okay, and to the resistance level. So this line gets closer to that line. It's going to bust one way or the other. But again, I'm seeing a little bit of a flattening here. That and that are just, they're at the tops. So I'm looking at, just looking at semiconductors, they're going to have to get past that line to get another run for me to be interested in it. But they've had a nice run so far, along with the technology. And then the last one I'm looking at is let's just look at some that were on the dumpster list. XBI. This is your biotech. So biotech came in and it's had a bad kind of a downward roll. It came back, went sideways, and now you're seeing it above the 9. still below the 200. Got some cells right above it. Now it's playing with the 50 and see if that'll remain as support, and a nice Bollinger rolling up. So this has kind of turned around since Monday too. So here was Monday. This was on my dumpster list. Another one was ALB, was on my dumpster list. So these will either move up or stay on the same. So here you can see last I looked at this, 1, 2, 3, 4. This is where it was on Friday. So I looked at it. I'm like, okay, this is a dumpster, but look, I've seen a little bit of maybe there's a crossover in the MACD. Okay, I don't see anything there, nothing there. And you can see now this week it's popped above the 9. We've got a crossover the MACD, a crossover the stochastic, and the RSI is still below the 50. So this will be now moved up probably to my under the 200 list because it's met that criteria. And you're seeing here's where the cells are today. So that's how I move between my different lists to get from something like this that might start doing something like that. But this was quite a long downturn here for ALB. And then let's look at, we talk about treasuries. And we'll see if there's any life in the old 30 or 20-year TLT. And you're starting to see some. Remember last week I said I'm watching this, and 1, 2, 3, 4, 5. Here's where it was last Friday when we looked at it. It was right under the 50. Came down, bounced off the 9, went up to the Bollinger Band, came back to the 9, and now it's riding. You've got some cells right here, but this may be a turnaround for TLT that they've been waiting for. It's been a long dip down, but it's got some room to run if it can get past these levels. So keep an eye on that one. That's all I had. Sorry, I took up all your time, but anything else you guys want to look at, talk about? Has this been helpful today?
Absolutely. I mean,
Okay.
I noticed the energy sector is down. So
Yep.
you're keeping an eye on, you're going to look at what stocks may be in that energy sector that maybe have a trend. So that's where you go to, as well as the XBI, right?
Well, these are just examples of what I've been watching. So I'll go through the 11 sectors of the S&P. Plus, I have several other sectors like solar and agriculture and others. And those actually go on my list. They either end up in a dumpster below the 200 horizon or the watch list. Those get in there. And then I look at those and say, these are the ones that are in the dumpster. What stocks are in the dumpster that look good? These are the ones that are under 200. What stocks within some of those sectors look good, to be in that list. And that's kind of how I go when I find these stocks. But again, we want to watch these go down, and then we want to see consolidation, and then see if it can, get some traction and start getting and hitting our oscillators. And these are where we want to focus on these levels here where the traction's going in the upward trend, and then we got to determine is it going to continue to go, or is it going to hit this line of resistance here and head back down? That's why we use the oscillators to kind of give us a little bit of a understanding of where that might be.
Today is Saturday, the weekend before Thanksgiving, and in closing, a couple things to take into account. A lot of Wall Street goes on vacation this week, so the volume that we should expect out of markets should be low. So as you're swing trading some of these stocks, be aware it's really a 3-day week, and I believe Friday is a half-day trading day, so you're not going to see a lot of volume. In Mark's case, he mentions at the end of the call, he's probably going to sit out the week, which, depending on your activity and your family gatherings and all that, it may be a good idea, not a recommendation or advice. Nothing in this video is recommendation or advice. It's for your education. But take into account that after Thanksgiving, it is a sprint to the end of the year. And a lot of big institutions are trailing where they have to be when it comes to money management, particularly hedge funds. So we may see some heavy volatility going into the end of the year as a last-ditch effort to get out and squeak out some amazing returns to keep clients. So be aware of that. Be aware of the fact that we should be all really thankful that we live in a country of freedom where we can practice, learn, and execute on things like swing trading with Mark and the Platinum Channel crew, and ability to become better, wealthier, and kinder people in the future. So with that said, have a happy Thanksgiving week, peace, and live loud.